Have you ever been staring at a chart and candles reach a certain level? You're left thinking, where is it going next? Up, down, or even sideways? The worst part is when you take a guess and it turns out to be completely wrong. This is a common problem among all the traders. But in today's video, I'm sharing a brilliant idea to potentially trade the trends both up and also down with ease. This is my personal technique, and it works whether you're into price action trading or even obsessed with trading indicators. Make sure you watch till the end because this could seriously level up your trading without any waste of time. Let's get started. One thing the professional traders do to determine where the market may be headed is they channelize the trend. Whether an uptrend, downtrend, or even sideways market, it can be extremely helpful because it allows them to identify breakouts. But what if I told you it is not enough because the breakout could just turn out to be fake? And here's where most traders get trapped. So how do we avoid this? We still use a trading channel, but with one simple twist. And that small twist is probably what separates winners from the losers. So the secret I'm talking about is the Fibonacci, but not the one you have probably used. It is in fact a tool named Fibonacci Channel. Pick that Fibonacci channel, click on your chart, drag it to the right as the first move, then drag it all the way down and to the left. That's all it takes. Watch as the TradingView's hidden structure comes to life. For some modifications, click on the Fibonacci, uncheck every level except 0, 1, and 0.5. Then add 1.27 and minus 0.27. These two levels can potentially save you from so many wrong trades. The rest of the changes are optional, but you can follow my steps if you want your Fibonacci to look exactly like mine. So this is the Fibonacci channel I'm going to use today. This takes us to our next step, figuring out how to actually apply Fibonacci channel on a trend. You need to watch this step carefully because this setup will potentially change the way you trade. For this uptrend, I'll start by clicking at the beginning of the trend and dragging it to the right, connecting the lows like you do when drawing a trend line. Then drag up and to the left, adjusting it so that the highs sit exactly on 1.27 level. For this downtrend, I'll start by clicking at the beginning of the trend, dragging it to the right and connecting the highs, just like drawing a trend line. Then I drag it down and to the left, adjusting it so that the lows are placed exactly on 1.27 level. The easiest part is of course applying Fibonacci channel on sideways charts. I'll click at the start of the range and drag it to the right, just like drawing a support or resistance. Then I will drag up and make sure the highest point is placed on 1.27 level, and in the end, what matters is one end of a trend should be either on 1.27 or minus 0.27. That's how you map it out. Now you're probably thinking, what's the point of using a Fibonacci channel, and how does it actually help me in my daily trades? See, the problem with a standard channel is that when a breakout happens, you're left guessing, is it fake or real? You may jump into a trade, convinced it's a real one, but in most cases, the trend reverses and hits your stop. But here's where the Fibonacci channel changes the game. Apply it to the same chart using the standard we talked about. Watch as the candles move down and reach minus 0.27 level. So here, you don't enter a trade. Why? Because in this setup, the candles must break through minus 0.27 level to be considered a real breakout. In this case, after 2 attempts, the candles simply couldn't penetrate minus 0.27 level. So basically, no breakout here. Instead, I could possibly take a reversal trade towards the 0.5 level. So now let's switch to another example. In this chart, I apply Fibonacci channel to this trend. Candles start moving up towards minus 0.27 level and break above it, and at this point, we got both the breakout and the pullback to that level. So based on what I explained earlier, a breakout from minus 0.27 level is probably a real one, so there is a possibility of a potential long position. Let me show you another example. I can apply Fibonacci Channel to this uptrend. The candles start moving down towards -0.27 level, and at the end, there is a breakout. Once again, we got a successful breakout and a pullback to that level. There is a high probability that this breakout could be a real one, so here is where I can consider a potential short position. Now let me show you how you can take reversal trades using Fibonacci Channel, meaning what happens when candles cannot break through 1.27 or -0.27 levels. I apply Fibonacci Channel on this trend. Candles start moving down sharply and reach 1.27 level. If there is no breakout from this level, this could potentially be a reversal trading opportunity. And in this case, you can see weak candles on this level, which implies market may not have enough bearish momentum to move further down. Instead of a short, I could consider a long position here and set take profit target on the previous high. At the end of the trade, candles moved above -0.27 level. There was a successful breakout, which implies market has completely changed direction. The key point here is that you can apply this method not only to major trends, but also to minor trends and corrective moves within larger trends. I apply Fibonacci to this market range after an uptrend. Then candles push higher and break through -0.27 level. And from right here, candles move sharply upward. Well, at the end of this trade, I can also see a potential short trading opportunity with a different Fibonacci trading technique. Just watch what happens. Now you might ask, how did this happen? With the same technique, you can apply Fibonacci Retracement to an uptrend and place a sell order. Or apply it to a downtrend and place a buy order. This is my personal price action technique using Fibonacci Retracement that I have shared completely free on this channel. If you have found value in today's lesson, I highly recommend checking it out because it complements the Fibonacci Channel strategy perfectly and can help you build a more complete trading framework. I've left the link for you in the description below. Before you go, I have to tell you, this video is for educational and informational purposes only and should not be considered financial, investment, or trading advice. Trading and investing involves substantial risk, including the risk of losing some or all of your capital. Always conduct your own research, use proper risk management, and consult a qualified financial professional before making investment decisions.